If we look then at the impact that's having on China's stocks and kind of the ETFs that track those instruments as well, I looked at the iShares China Large Cap ETF. That was down around 4.9% year to date. But interestingly, obviously, it's rebounded since Monday quite heavily. And that's off the back of China's central bank announcing new steps to boost bank lending. And that could be, or seems to be, part of a broader kind of bolstering of growth. Talk to us about what's happened already, and then perhaps you can explain what you expect to happen over the next few weeks.
Yeah, no, sure, you're absolutely right. So, obviously check market reader screens all the time. So I checked in, and we were up like 2.8% or something in the different China-related ETFs going into this meeting. And the explanation is that there's some kind of effort now to stop this slide, right? So it was already rumored yesterday that there's going to be an equity support fund of some type. There were big numbers mentioned, 2 trillion yuan. And there's been some official communication today that has put a little bit more meat on what's happening, but I think it's fair to say that the plans are not spelled out yet, right? So it's a discussion that's ongoing. If they wanted to buy more than $200 billion worth, where's that money going to come from? That sounds like a lot, and I don't think it's totally clear, like, where is that going to be funded from and so forth. So I think this is a plan that's work in progress. It often happens like this when there's kind of like a panic in the market. We had like really a meltdown, right, with the Chinese indices underperforming U.S. stocks by 10% in a short period of time. So quite dramatic. It's often that type of price action that generates a policy response, and you often have the policy response being kind of half baked because they have to rush it out, right? So they've leaked something that is only at a sort of very early planning phase. And it's not clear to me where the money is going to come from or whether the amounts that have been mentioned are really realistic. Like, there's been talk about this money coming from an offshore type vehicle, right? But there's not that many entities that have, $200 billion in spare change sitting around. So, and I also, China lost a lot of foreign exchange reserves when they attempted to defend the currency in the mini crisis they had around 2015-16. So I'd be reluctant to. I think they would be very reluctant to spend more of those reserves. Like, they essentially had $4 trillion of reserves before that, and they spent $1 trillion, right? And I think since then they've not really been touching them. They think, okay, that's our really reserve that is there to boost confidence. If they start to spend that, it could be counterproductive. So it have to come from somewhere else. And I think probably amounts are going to be bigger. Then we've had a reserve requirement cut overnight. That is sort of more traditional monetary stimulus. Is that going to have a big impact? I think at this point it's more signaling than them having announced something that's game-changing. Like, we can see they take what's happening seriously. They're trying to do something, and there probably is more in store. I think alone, a reserve requirement cut is not going to change the direction of the Chinese economy, but perhaps it shows that they are willing to take action quicker than people thought, and we're going to have other things going on. Like, typically the way the Chinese economy has been managed has been not through interest rates like in other economies, but like there's some specific push to direct a certain quantity of loans, right, into certain sectors. And it would not be surprising if there's another push in that direction. But the challenge is that China's economy has big structural challenges, right? The real estate problem that they have is not an easy one to fix. But I would say if you look at how markets are reacting, just looking very broadly, right, we have today, for the first time in a while, the market's kind of taking it seriously. Because we've had so many false starts where there's some little stimulus announcements and people have said, okay, we've heard that many times. But on this occasion, we've had, for example, copper prices move 2-3% quickly, which is how it felt in the old days that, okay, China's going to do something, it's going to have an impact on the industrial sector. So we've seen that. And we've even seen the dollar move. I think the dollar move we've seen today is a function of the news out of China. Like the dollar's often sort of doing the reverse of the signal that comes out of China. If there is something positive happening for China, the dollar trades down. If there's something bad happening in China, the dollar trades up, right? And there is a little bit of optimism around China now, at least tactically, and the dollar has traded down in response, which is the first time in a while we've seen that. So crucial to watch whether they're going to follow through on these hints, these signals they're sending, and actually deliver something that's going to impact the economy. We updated all our real-time activity indicators in China into today, and it has been looking weak into January, right? So they need to do something to really make that momentum shift in a more positive direction.